Well, the Kenya Revenue Authority has emphasized that stockbrokers and agents carry the full responsibility of collecting and accounting for the capital gains tax as far as stock market transactions are concerned. The levy, which is making a comeback since its the levy, which is coming back from suspension in 1985, is charged on profits realized from sale of shares, securities, property and other assets. The government has been implementing it at 5% from the 2nd of January this year. KRA has, however, had it rough with stockbrokers who have held to the opinion that their systems do not have the required capacity to collect and account for the levy. KTN's Charles Gitonga has the details.
Last year, the Treasury did announce the introduction of capital gains tax amid hue and cry from property dealers and stockbrokers. But the government stuck to its guns, defending the decision. Treasury's position was that the capital gains tax will aid in financing the 1.8 trillion shilling budget. From capital gains tax, KRA is projecting to raise about 7 billion shillings in 2015. But as far as stock market transactions are concerned, the taxman is not having it easy as stockbrokers claim that they are not legally mandated to collect the levy on their behalf.
I think the main challenge is on the obligation of the broker to calculate the gains and losses experienced by an investor. I think one of the main challenges is upgrading the system. How do you ensure that the system is upgraded in such a way that such transactions can be calculated automatically?
The last 6 days have been marked with some confusion at the Nairobi Securities Exchange as investors took a backseat to understand how the Kenya Revenues Authority will implement the capital gains tax. And now the authority is out to shed more light on this issue.
The responsibility to collect and account for capital gains tax lies with the stockbroker or agent handling the sale and transfer of shares or bonds.
The taxman further says that he has revised the guidelines as regards to the levy. Jiraini notes that they have issued key players such as the Nairobi Securities Exchange, Capital Markets Authority and the Association of Brokers with clear reference prices in respect to share transactions. The guidelines read that for stocks acquired before January 1998, the highest share price achieved at the stock exchange in 1998 will be the reference price. For stocks acquired between 1998 and December 2004, the reference price will be the highest share price achieved in the year of purchase. For shares acquired from January 2005 to date, reference will be made to the actual price as reflected in the central depository system. So far into this year, stockbrokers have shied away from collecting and accounting for this tax, which means that KRA has missed the opportunity to net in millions of shillings.
We are prepared and ready to implement it, and we are actually implementing it.
The taxman now says that talks are ongoing between them and other stakeholders on how this tax will be implemented smoothly and effectively. Charles Gitonga, KTN.